Hi, good day trader. My name is Wasky Smart FX. Welcome to our YouTube channel. Okay, in today's video, we'll be talking about the market structure, intermediate time high, intermediate time low as an entry pattern, and this is episode 4. We'll check our YouTube page. We see episode 1, episode 2, episode 3, where it talks about the intermediate time high, intermediate time low as an entry pattern. So, which means it's just a part of market structure because this is not um, the the whole or the totality of market structure. This is just a part of this market structure. And as we go along with this series, I will dive into more of this parts or the component of market structure. So I'm only bringing this out because even if you check some of my previous video on YouTube channel, I dropped this exact market structure, this exact pattern before. So I'm just trying to like show people that okay, this thing actually work, and it's just a market structure. Um, in previous video I show example and I talks about this same pattern. So and this is the same pattern we'll be looking at also in this video. Okay, this is it. We have, and in the previous video, in the episode 3, I talked about that intermediate time high, intermediate time low are the outsiders of the market. They can be used as a reversing pattern. So, which means that when market is bearish before, if market want to turn to bullish, there is high probability that the market makers are going to create a intermediate time low. So for market to turn into bullish, they need to create an intermediate time low. And if they want to turn into bearish, they will create an intermediate time high. They are the outsiders of the market. You know, when we talk about the market structure, I will still talk about having short time high, short time low, having a lot of these components in the market structures. But the outsiders are the intermediate time high, intermediate time lows. So we have dived into it on episode 1, episode 2, episode 3. So just look at it here again. And I'm doing this structure for people that their first video of this series is episode 4. Okay. When we are bearish, we see market retracing back to the discount array, which is the fair value gap in the premium array, which is the fair value gap in the premium zone, and coming down. So when market get to this red line zone, is a zone on higher time frame that you expect buy. So which means that before you even look for this strategy, you must have an expectation. So and I talked about this thing. I think in one of my video on YouTube, I talked about that the two things you need to look for before you take a trade. Number one is draw on liquidity. There is a saying in the forex market that if you don't see the liquidity, then you are the liquidity. So first thing you need to master yourself or be able to see is the liquidity. Second thing is the narrative. I talked about this when I talked about the 5 foundational level in the forex market. The second thing is the narrative because you need to see the narrative. Narrative is just talking about how can we get to the liquidity zone. So this particular zone here, this red line zone, is a narrative on higher time frame. I saw a narrative on higher time frame. How we can get to the so when market get to the narrative, that is when I want to look for entry pattern to get to the liquidity zone. Don't get me wrong. Don't just go into the chart and look for this pattern anyhow. Market is going to create a lot of them, and the funnest part of everything is that you are going to miss a lot of them too. So do it right, do it well, and you see the result well. So when market was bearish and this is here, so the main market want to change to bullish, you enter a fair value gap which is in the PD arrays, which one is the premium array. The main market enter into it, it was unable to break this low. So that is what qualified this low to be an intermediate time low, a lower low and a lower low to the left and the right of it. That is what qualifies it to be an intermediate time low. So the moment market break this high that once traded into the premium arrays, that once traded into the premium zone, the moment market break the high and create a new fair value gap. See, that is very, very important. Market must create a new fair value gap. The new fair value gap is what will give us the bullish continuation, which shows that This intermediate time low is a confirmed one. So that is the whole pattern, and that is what you are looking out for. So let's go into the chart. We'll be looking at gold. Yeah, we'll be looking at gold now. And yeah, okay. We're looking at this particular trade here. We took on Friday on the channel. We took this on Friday on the channel. So looking at gold buy. So this is it here. Before I dive in into, let us go to 4 hours so I can see what I'm talking about. So I won't just be as if, oh, the guy is just taking a trade out of anywhere. Okay, there's a draw liquidity on this particular eye. On this eye here, there's a draw liquidity here. You can see the market was bullish here, and on these 4 hours, so everything when market was retracing, market retraced into a fair value gap. Every retracement, market retraced back to a fair value gap. Yeah, you can see how the market is retracing to a fair value gap here, and these two. So I expect market to retrace the fair value gap, then continue the buy. So where can market get to? At least this high. So you can see what I'm doing here, at least this high. So I go down to lower time frame, 30 minutes, to look for entry pattern on that particular zone. So this is my narrative, and this is my draw on liquidity on 4 hours chart. 4 hours chart. So I have a narrative and a draw on liquidity. It's not like I just enter the trade anyhow. So when I get there, yeah, I can see that we have a low here. You can see this low. We have this low here, bearish, and market has a fair value gap here, which market enter into it here. So market breaks high, this high here, market breaks it. This low here was unable to take this previous low. You can see that it was unable to take this previous low. So which after market break this high, it confirms that we have an intermediate time low. So we have an intermediate time low here. So I use the fair value area zone, which is this. Some can be like, oh, which fair value gap should I use? I prefer a fair value gap that overlap with a fair value area. Is a very good zone to continue the buy. So here we have 1, 2, 3. You can see this low here. That low is the intermediate time low. So our entry is in the fair value gap, and stop loss somewhere below here because the stop loss will be much. So don't forget, always 1 to 2. Just take out 1 to 2. Yeah, that's trading. So you can see take profit here 240 pips. So you can see the trade here the way same way I took it, the way I put my fair value gap before market hit the take profit and everything. You can see how everything plays out. Okay, let me show you. I want to show you the end product so that you can possibly look at the end product together. And okay, so this is the end product of the trade. You can see it here. So let me show you another trade that's on USD cards. Okay, let me use this chart. I have many charts. I'm using, so I can be able to see things well. So this USD card here, and on 4 hours chart. On 4 hours chart, I'm looking at this fair value area zone, and this is my liquidity zone, and you can see that market is bullish, and every retracement into a fair value gap, market is bullish. So at this particular zone, I'm expecting an entry. So I go down to 1 hour charts. So going down to 1 hour chart, I can see that market is bearish. You can see that market is retracing back into a fair value gap, and here also we retrace back into a fair value gap, right? But see something here, market did not take out this low. Even though market retraced into a fair value gap, but it did not take out this low, then it breaks this high, then creates a new fair value gap, which stands for what? The buy. The stop loss below here, and the take profit here. So don't forget, intermediate time low, intermediate time high, they are the outsiders of the market, outsiders there, but you need to have a narrative and a draw on liquidity. So that is it. So just master them. And if you want to join my Telegram channel, link in the description. Don't forget to like, share, and subscribe. Thank you so much. Yeah.